Yes. All right. So, without further ado, we shall begin. For those of you having a fabulous day, I hope this keeps it going fabulous. And if it doesn't, just get off. For those of you that are not having a fabulous day, well, maybe we can change that a little bit. All right. First, the disclaimers. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Even further, this is not a solicitation to buy or sell any security ever. This is not advice. Past performance is not necessarily indicative of future results. And you should read the characteristics and risks of standardized options, which is a document available on the OCC website. Before I get to the agenda, I'm going to do the pre-agenda agenda. And this is it. Excellent results since the last webinar, which was on November 18th. They're better than what we emailed because time has progressed. Another 150 alerts, and we will be introducing a new AI strategy not currently in TradeMachine, inspired by the great Max Katz, who is in the community. He is our ambassador, former commodity options market maker, there to help all TradeMachine members. You should go in community and talk to Max, and he gets credit for the inspiration of this new AI strategy. Now, let's go to the agenda. This is the agenda slide. Pretty interesting. We'll talk about trading in general. We'll do it in the platform, then the portfolio. As I noted, a new strategy never discussed before. And that was the agenda slide. Look how quickly we're going. Look how quickly we're going. Okay, trading generally. Why am I talking about trading generally? Three reasons. First of all, I'm compulsive, so that's one. Two is because I think in the book of life, so each of us are our books of life. Hopefully we can all say, well, I'll speak for myself. Hopefully I can say, or someone says, like, my epitaph reads, he did well for people. At the very least, I hope it says he tried to do well for people, which is, that's still a high bar. So let's try and do that. So if you have not had success in trading, especially options, although really any trading. So if you trade bond futures or whatever, like there's a chance it's the mistakes here that explain your performance, not the TradeMachine stuff, just this thing. And so this first bullet, well, it's a second bullet point. This is something I repeat a lot, and there's going to be a lot of TradeMachine members who are going to say, Ophir, like, appreciate it. Can you just stop with the same introduction every time? I can't because of my epitaph. The epitaph that will never be written but lives in my mind. It must be that I at least tried to do good. It must be. I cannot imagine existing without that, at least that effort. Sorry. For those of you who haven't seen it, you're going to go on a little bit of a roller coaster. One thing I can promise all of you, it's shorter than normal. Okay. You have heard me say, for a successful trading career, I'm talking about this thing, trading generally, right? Okay. We have to look at the long arc, and I believe that option traders need a portfolio of trades. What is a portfolio of trades? I'm glad you asked. That means some trades which are long volatility. If you don't know what that is, it means you basically are buying options. You can think of a trade as long volatility if it's a debit, if it costs you money. Okay, but you also need short volatility, right? So it's short options, not naked. Neither of these are naked. But that means like if you're doing a trade and you're receiving a credit, you're pretty much short volatility. This is broad strokes, but it's close enough. If you want a real lesson on Vega and Gamma and all that, then Jason did that, and we have legit education. But this is so we can move quickly. But you need more than being long vol and short vol. You have to be prepared to have trades like if there's a bull market. We've roughly been in a bull market, right? Or not roughly, we've been in a bull market. But you also have to be prepared for a bear market. But there's also things, so in between a bull and a bear market, if you're going from a bull market to a bear market, stocks are falling. If you're going from a bear market to a bull market, stocks are rising, right? So you have to be prepared for those too, recovering or falling markets. This, broadly speaking, would cover a portfolio of trades. You still have to know what they are, but if you look at the trades you have that you're prepared to do and they cover these things, you can say, yeah, I think I have a portfolio of trades, roughly speaking. I have been reticent to share actual setups. You guys know that. There's some pressure to being followed so closely, right? Um, and I focus more on like guiding principles, things like this, right? But in the last webinar, you guys kind of broke me. I just shared 140 alerts. And the 140 alerts did this. They're missing one piece, which is sector diversification, which is what we're going to do today. But they definitely covered all all five of those things. I did, however, say that just because these are 140 alerts, we're doing, just to be clear, we're doing another 150 today. I'm not going to review the old ones. I said they're not meant to be the end all be all, right? It's just I did like broad strokes before, and then I did more specific. So they're explicit examples, but they're not end all be all. And what I mean that they're not end all be all is I mean they're not end all be all. And what I mean when I say they're not end all be all, I mean they're not the end all be all. Those were examples. These next 150 are examples. Yes, we agree. No one on this webinar thinks that Ophir will tell you what to do. You will therefore make money, and that is what TradeMachine is. That is not what TradeMachine is. That is not what Ophir will do. And if that is what you want, this will not be a productive software for you. However, on the webinar, in the webinar on November 18th, where I finally said, okay, fine, here's some of my alerts. Right. I did show a full-blown portfolio other than sector diversification. So before we get into trading generally, before we talk about new alerts, it is fair now, since I did put trades out there, that we have a scorecard. That's fair. So here are the results of those 140 alerts from November 18th through March 20th or 21st. I didn't update it like this morning. You guys are just gonna have to, it's within Thursday. I think I did it Thursday. So here they are. These are the alerts. There's a bunch of types of trades. Some of them didn't happen. By the sell-offs just didn't happen. It's okay. It's a rare trade. But for these 4 months, we saw 27 wins, 8 losses, 77% win rate, an average like 3-week trade of 37%. These are outstanding results. 35 total trades in 4 months is about 9 trades a month. I know that you have some liquidity questions. I'm going to satisfy those as well. So in general, what I'm trying to show you is not that I'm so smart, really not at all. Everything I did was in TradeMachine. I just want to show you that I did some back testing. It ended in November 18th because that's when we were doing the webinar. And then we just let it run for 4 months. And it's not a mystery that we're now doing a webinar 4 months later. It's like, okay, let's take a little bit of look at the track record. Oh my God, the track record's very similar to what we expected. So this is some evidence for you that back testing may actually work, in particular when you layer on our proprietary artificial intelligence. Since I'm going to be sharing an actual portfolio of new alerts, that's my job. You also have a job, and this is where I'm going to repeat myself. You understand my job. My job last webinar was to do this. My job this webinar is to do that again. More alerts, different sectors. Okay, new strategy. But you have a job too, and many of you are familiar with this. Those of you who are not, get ready for a dose of reality. A lot of people say they want to do something. Okay? A lot of people say they want to do something. But what they really mean is they like the idea of something. And if you want to know the difference, think of something you daydream about from time to time, but you've never really pursued. You like the idea of that. You don't really want it. And by the way, liking the idea of things is perfectly fine. In fact, I can't imagine being alive without having some daydreams, without liking the idea of doing things. How could you survive in a world that's only based in reality? That reality can be quite harsh. But you should know the difference, because this is the difference between dollars and cents in trading. Understand the difference. You say, oh, well, what's the difference? Okay, well, let's talk about the difference. In my opinion, if you want to be a successful trader and you're able to disentangle this difference, wanting something and liking the idea of something, then your focus will be on the following 3 things. TradeMachine members, here comes our mantra. A process or a plan. Since I've talked about these things, I'm going to introduce someone. I had a conversation with someone you may know, Ben Franklin. Yes, Ben Franklin is dead. We're close anyway. We're tight, me and Ben. Everyone talks about having Benjamins. Okay, well, I brought Benjamin. So here's what I talked to Ben Franklin. We had a little bit of argument about electricity. He was right. Um, and I said, well, Ben, what do you think about this idea of a process or a plan? And you know what he said? He said this. He said, by failing to prepare, you're preparing to fail. It's like, wow. So I'm going to use that in the webinar. He said, that's okay. I said, okay. I said, do I have to give you credit for it? He said, come on, Ophir, I have to give you credit for it. So I'm giving Ben credit. I say you need a process or a plan. And he says, well, by failing to prepare, you're preparing to fail. Then I like to tell people, right, we need patience. That's patience with yourself and with the plan. And I told Ben, I said, what do you think about that, man? He said, he that can have patience can have what he will. I said, wow. I said, you speak oddly, but I'm gonna paraphrase. He said, don't paraphrase me, take the quote. I said, all right, this is Benjamin's quote. All right, and the third thing you need is effort. And there's two things about effort. I'm gonna give you the bad news first and the good news second. I like to finish on a good note. Here's the bad news. It's probably not going to be as easy as you want it to be. You think, I want to be a trader, I want to trade options, I want to be profitable, I want to get those results TradeMachine showed me. Let's do it. Yeah, it's not going to be that easy. But there's a good part. Now, as I was telling Ben Franklin this, he interrupted me. He's very talkative. He's incredibly talkative. And I said, yeah, well, Ben, I haven't said the other part. He said, no, I don't want to hear the second bullet point yet. He said, something I want to tell you, Ophir. I said, yeah. He said, laziness travels so slowly that poverty soon overtakes him. I told him again, I said, that's really clever. You're saying if you're not putting in effort, you're lazy. And I said, can I paraphrase that? Because you speak like in old English. And he said, no, you cannot paraphrase me. You have to quote me. I said, all right. Ben Franklin says, laziness travels so slowly that poverty soon overtakes him. And then he had more to say. He said, when you are finished changing, you're finished. And I said, well, what does that mean? And he said, just because you're familiar with something and you want to do that, that doesn't mean you shouldn't look at the things that you're unfamiliar with so you can progress. And I said, man, that's really good for TradeMachine. You must have an appetite in life. And since I'm not talking to you about life, I'm talking about trading. You must have an appetite to run toward that which is not familiar to you, because the things that are familiar to you aren't working. When you are finished changing, you're finished. And I thought Ben was so good, I'm just going to have all four things that he said. Basically, he said, you need a plan. He said, you need to have patience. And he said, you need to have effort. I was like blown away. I was like, wow, man, that's exactly what I tell traders. This is exactly what I could not believe Ben Franklin was on the TradeMachine train. I looked back. He's been a member for like 7 years. It's amazing. So in all seriousness, I told you there's the bad part of effort. It's probably not going to be as easy as you want it to be. I do want to give you the good news about effort. It's also probably going to be more satisfying than you think it will be. And the reason it will probably be more satisfying than you think it will be is actually because it's probably not going to be as easy as you want it to be. There's something very satisfying as human beings when we accomplish something and it simply took effort. It just is. It's far less satisfying to win the lottery than it is to earn $10 million. It just is. And just look at every lottery winner in the history of time and look what happens to their lives. They're actually worse off because they didn't put in the effort, which says something about the human condition. So know the difference about wanting to do something and liking the idea of something. It's okay to like the idea of doing things, to have daydreams and to not really pursue them. God bless you. I certainly have them. But if that's what you think about trading, like, man, I just have these dreams about like trading and being so successful, that'd be awesome. And you never really do anything about it, then just that's fine. Don't start committing capital to it because you're going to lose your money. And that wonderful daydream you had is going to ruin your life. Okay, so one last thing. The process and plan part, I can help with. TradeMachine can help with. The effort part, TradeMachine can do partially for you. I can't really do a lot about the patience thing. So some of us, not me, are just naturally patient people. And you're just that's a beautiful character trait to have, honestly. And so the patience part won't be that hard for you. Some of us, like me, we're not naturally patient. I'm not a patient man. Those of you who know me for the last 10 years doing CML, by the way, CML turns 10 years next month. For those of you that have been with me for that long, you probably have picked up over the last several years or decade that I'm not the most patient man. So this was actually really the hardest part for me. Effort has never been a problem for me. Having a process was never hard for me. Patience was hard for me. So I can't help with this. That's one thing that like you kind of got to bring yourself. I have some personal views that might help you as an impatient person that might help those of you who are impatient. So I'm going to try with that. Okay. So here's what I have to say. Take it or leave it. I'm just trying to address this thing that I can't, that TradeMachine can't help you with. The journey to loving and understanding yourself is not a race, I assure you. I'm 47, if you're wondering how old the person speaking is. Okay. I was 37 when we started CMO. I was a market maker at 32. Okay. I'm different. It's just not a race. It's a walk. Um, what I have learned with regard to patience is just to be gentle with myself. Okay. Cherish yourself, be patient with yourself, and a plan will help with your patience as long as you do this one thing. And TradeMachine members know what this one thing is. It's the one time that I'll use bad language on the slideshow. If there are children who are watching this, and I'm so honored that some of you bring your kind of young ones to watch, like, hey, here's to introduce trading. You need to mute your audio for a second until I get off the slide. So I'm generally a very kind man, but I do have to be realistic with you when it comes to trading, because ultimately you're not really here to you're not here to listen to my life views. You're on a trading webinar. So I get that. I'm not here to preach, to literally preach Ben Franklin. All right. So just for a moment, kind of find yourself, feel your butt on your chair, touch your hands, just be present for a second. Okay. Stop looking at your phone just for a second, and then you can go back to your phone. Just listen. And if you're watching the slides, you could even close your eyes. Okay. And listen to this next thing I'm going to say. A plan can help with patience as long as you write it the fuck down. Write it down. Don't sort of write it down. Don't think you know it. Don't have it in your mind. Don't use a piece of scratch paper. Write it down. Write it down. You want to know a part of effort? Right here. If you don't write it down, then you have to run. You don't have to. I recommend you run toward the thing that is unfamiliar to you. Life is hard. Life is fast. Life is busy. I got it. If you want to trade, in my opinion, you need a plan and you need to write it the fuck down. And if you don't have the time to write it down, don't trade. If that effort cannot be exercised by you, just stop. There's so many other things you can do with your life. One of the most celebrated, maybe the most celebrated trader ever, Jesse Livermore. We love him. He is the basis for the book, Reminiscences of a Stock Operator. There's one thing you should know about Jesse Livermore. Jesse Livermore's life died with a pistol in his mouth. He killed himself. The most celebrated trader ever. This is not an easy thing. One way to make it easier is to develop patience. And one way to develop patience is to have a plan. And one way to exercise that patience in a plan is to write it the fuck down. Write it the fuck down. If I knew Jesse Livermore, that's what I would have told him. I don't think he would have ended up with a pistol in his mouth. Don't like the idea. Want it. Here's your first test. If you like the idea, you're not going to write it down. If you want it, you're going to write it down. The red is your job. I told you what my job is. I'm about to do it. This is basically the end of the slideshow. Right? A process or a plan, I'll show you how to do that. Patience, can't help you with that. Effort, I'll help partially. The part you have to do, write it down. Don't like the idea, want it. This is effort. It will take effort. To have a portfolio of trades that historically do better at different times of the market cycles in order to make the long arc of a trading career successful. This is trading in general. Well, what is a portfolio? We have live help sessions. Max ran them. I did some. Jason Hitchings, our CTO and the creator of TradeMachine, runs them with Amanda, our head of client support. In live help sessions that I did, I did this, right? We have a strategy called Spread the Sell-Off plus AI. I showed a couple of sectors. Something called Buy the Sell-Off with AI. I showed 3 sectors. I talked about when stocks have technical strength. Another strategy with our AI, went over several sectors, multiple time frames. Then I did when a stock recaptures technical failure. I want to move this slide up a little bit. Okay. It was like a fade the dip. I showed like what when it doesn't work, right? So I'm going to move these. I'm going to scrunch this together too. This is a portfolio of trades, right? This is what we're going to do right now. So this is a little ethereal, and it's going to be explicit in a second. And just to be really, really clear, remember what I said at the beginning? It's different market cycles: bull, bear, falling, rising. Okay. So this is when a stock has dropped and might recover. Right? This would be like a recovering out of a bear. This is when a stock has technical strength. This would be a bull. When a stock recaptures technical failure, there you go. This would be more bear market, bull market, moving market. But it wasn't just different markets, right? I said it also had to be different types of trades, selling volatility and buying volatility. The green ones are selling volatility. The blue ones are buying volatility. Another way to say that is the green ones receive a credit. The blue ones have a debit. I say always spreads, and always isn't a great word. I actually like to say never and always, unless you're saying never to saying never and always. So I shouldn't have said always spreads. I'll say usually spreads. And then the last thing is different sectors. That's the part I did not do in the last webinar. There was only so much I could put into everyone's brains in one webinar. The second webinar was already planned. This is a portfolio of trades, and we will have our portfolio of trades today. Okay, and that's it. Okay, now we're going to go into the platform. That was my slideshow. You never have to hear me say that again until the next webinar. We will talk about a new strategy at the end. One thing that I'm going to bring back again and again. Back testing is at the core of this. I look for strong results in a sector first, like the entire sector. I want something to have worked. If and only if it works in that sector, then I'm willing to find the best performers for a certain strategy in that sector, and I'm willing to trade them. But it must work for the sector first. I am not going to cherry pick the best trades in a sector if it doesn't work for the sector, because that feels like overfitting to me. So let's do the portfolio. I'm going to exit, hypothetically. Legit. Cool. A little more painful than I thought. And now we're going to go into TradeMachine. Hypothetically, I'm prepared. I am prepared. Okay, guys. The last webinar talked about the tech sector. I'm going to go through the same 4 strategies in other sectors, and then I'm going to introduce a new strategy back in the tech sector. But first, let's be complete so we can be sector diversified and actually have a portfolio of trades. I will click on the backtest tab. Oops. Pay no attention to the man behind the curtain. That was my bad. Backtest tab. Here's how we do it. Nice and easy. If you guys recall, the first strategy I discussed was called Spread the Sell-Off with AI. Before I even do anything in TradeMachine, I just want people to recognize what it is this is doing. It's called a broken wing butterfly. Doesn't matter what the name is. They call it a butterfly because it's sideways. This looks like a butterfly. I don't know if you guys see it. I've never seen it. Some people think this looks like a butterfly. I don't know. The idea is the stock price is right here. Okay. If the stock goes up, as long as you do this trade for a credit, it's a profitable trade. You actually make the most money, though, if the stock goes down, right? So stock goes up, cool. Stock goes down, even better. If the stock goes down, which will happen about 20% of the time, okay, that's where you start losing money in this trade. And this trade is covered, so you're not going to lose your house because of this trade. You know very explicitly what your max loss is, but this is the trade we're talking about. I'm not going to go through the ins and outs of the buying and selling. That's done in live help. But at least I want you to understand the strategy we're looking at. Okay, so here we go. You go to save backtests. You go to spread the sell-off with AI, and you load it. Just load it. Just let it happen. TradeMachine is going to load. No problem. Great. Then I want to look over the last 3 years. Great. In the last webinar, we focused on the NASDAQ 100. I don't want to focus on the NASDAQ 100 because I want to be sector diversified. I've already got those alerts. I'm going to go to portfolios and I'm going to start with financials. And here's what's going to happen. TradeMachine is going to start ripping through every stock in the XLF, okay, in order to measure the performance of this strategy. It's remarkable. Okay, TradeMachine's getting overloaded. XLF, this ETF, is something like 150 names. I don't know exactly. If you are a monthly subscriber to TradeMachine, you can do everything I'm doing, but your portfolio will only load 50 tickers at once. Okay. If you're an annual subscriber, which we have a fancy name for, we call a platinum subscriber, your portfolio can have as much as 200 names. So you'll just be able to do this much faster. Also, platinum subscribers, these annual subscribers, back tests are 5 to 50 times faster. So you just roll through it faster. So you can do this if you're a monthly subscriber, absolutely. It's just easier if you're a platinum subscriber. Oddly, a platinum subscription is less expensive than monthly if you run it out by month. So if you want that upgrade at any time, you just email support. You always have that option. So I'm going to let this run. Okay, I'm going to let TradeMachine do it. Unfortunately, TradeMachine is getting crushed right now because everyone is following along with me. So this is going to take a little longer than I wanted. So we're going to have to entertain ourselves as TradeMachine does this. Yeah. Are you not entertained?
Did you not prepare a story for this?
My stories are for later. It's true though. I could bring Ben Franklin back. Okay, here we go. It's starting to, you can now see it's starting to go through. So sorry, guys, this webinar in general is going to take a little longer than I anticipated. It's okay. It's worth it. So what I'm going to be focusing on, I'm going to bring this back. This, hypothetically, have an image open. Yes. So if you remember, there was a slide and I'm just taking a snapshot of it. So back testing is at the core. That's what we're doing. I'm looking for strong results in a sector first. If and only if the results are strong in the sector, will I go any further? I can log into another URL. Let me go here. I'll log in somewhere you guys can't see. Otherwise, everyone's going to use that URL. Okay. I will log in. Okay. Yeah, Jay, if you could email me your login and password, it doesn't. Oh, I think I do have that actually. Okay, I'm in. Okay, I'm going to try this, guys, to go a little faster, maybe. Anyway, so just remember, the first thing we have to do is look at that top line, right? How is it doing for the sector? I'm going to try this. I'm not going to stop the thing from running, but I'm going to go back. I'm going to go to save back tests. I'm going to go to spread the sell off with AI. I'm going to go to 3 years. I'm going to go to portfolios and I'm going to go to XLF. And yeah, it's just way faster. So this is our own machine. So let's watch how much faster it'll be. Oh, this is done. Great. Okay. So, by the way, there's 73 stocks. So platinum members would get all of these. So remember, it must be that the results are strong over the sector. These are very strong results for a sector. Since these results are strong for the sector, I'll bring the image back, right? It's an if and only if. It's an if and only if. I will find the best performers in the sectors if and only if the sector performs well. The sector did perform well. Now, here's our next step. I'm going to sort everything by average trade. I want to get alerts for companies that have strong average trades, but it's got to be 3 trades or more. Otherwise, it's just kind of not really holistic data. So I'm just going to start clicking them. I like this. I like this. This is only 2. If you can see where my when my cursor moves, it's highlighting a row. Makes it a lot easier. I'm looking for numbers there's more than 3 trades, 3 or more trades. Okay. I'm going to do this like this painfully slow a few times, and then I'm going to start ripping through it and give you the alerts. But it is worth it. So all I'm doing, if you're wondering why I'm skipping things, you can see these rows. There's only 1 trade for that ticker, so I don't want to do it. Okay, you can see these results. KeyBank, Prudential. think that's Fifth Third. Goldman Sachs, 8 wins, no losses, 44.7% per trade. I'll keep clicking them, clicking them, clicking them. I think that's American Express, but only 2 trades. MetLife, MSCI, Citigroup, INF. All right, you guys see what I'm doing? Very easy. Just click, click, click. All right. That's an exchange, the ICE exchange. I'm going to show you a shortcut when I do this, how to create your alerts. Faster than I've shown you before. We just changed it. Okay. This is all I got. Those are the ones. Actually, you know what? These average returns aren't high enough. I'm going to stop here. So the 18% is kind of like that. I don't want these average trades at 14%. So normally what I would do is I would add an alert with all of these, but it would be all the tickers. I want to show you a little trick. Okay, here's a TradeMachine trick. Click add alert. Take these tickers. Okay, I'm going to select. I'm actually going to go slowly. I'm going to use my right clicking. Select all. I'm going to copy those tickers. When I go back to the backtest tab, I'm going to go to tickers. I'm going to paste those tickers in there. So now I'm only looking at the tickers I selected. And if I've done this correctly, I think this will be 42 trades. Yeah, there's JP Morgan in there. I like to see that. Yep, 42 trades. Okay, here's how the 42 best companies did. Okay, this is only relevant to me because the sector in general worked. Now I'm going to click add alert. It's got my 42 tickers. I'm going to write myself a note. This is spread the sell-off. Whoops. You will get this link. Don't worry about it. And I'm going to say financials. Okay. I'm going to click add alert. All 42 alerts were added. So this technical condition, which we can look at here, this occurs when a stock in the last 30 days is down 10% or more. It's what we call a correction. When the stock is already below the 200-day moving average, and 2 of our measures of artificial intelligence trigger at a certain level. I want you to remember those last 2 things because I'm going to apply that same logic in AI to a new strategy. Okay. So I've just added 42 alerts. Okay. How about the next strategy? The next thing I want to do is the pre-earnings diagonal. That's for a bull market. Pre-earnings diagonal with AI. I'll load it. Let TradeMachine do its thing. I'll go to 3 years. I'll go to portfolios. And what I want to look at here first and foremost is, are the results good enough overall in the sector for me to pick the best? After that, I'm going to show you 2 strategies in a row where it fails, where I say, nope, don't want it. There are sectors where some strategies will fail. And because of that, there's a hole in the portfolio. And that's why I'm adding a new strategy. The hole is that we're selling more volatility than we're buying, which I'm generally okay with, but it's getting overwhelmed with selling volatility. Okay, this is a great trade. This is a 1-week trade in the sector, 63% win rate, 20% in a week. And I think we can all agree we're having a pretty good time. So I'm going to do the same thing. I'm looking for more than 3 trades. Sorry, 3 or more, pardon me. Oops. All right. Here's Bank of America. Like to see that. Here's SIBO. Here's Visa. It's everywhere you want to be. Schwab. I'm actually okay with 2 wins and 2 losses here. My win rates, I don't get too excited about. It's the average return. I mean, I don't want a 10% win rate, but I think that's good enough. Well, let's go down there. All right, that's enough. So I've selected, I think that's 15 tickers. I'm going to do the same trick again. I'm going to click add alert, but rather than add the entire backtest, I'm going to right click, select all, right click, copy. I don't need this anymore. Don't need this anymore. Don't need this anymore. I'm going to go back to tickers. I'm just going to stick them in. This will give me hypothetically 15 alerts. 14. All right, well, I missed one. 14. And here's how those best 14 did. Right? This is a one week trade. I'm going to add the alerts. This is the pre-earnings diagonal. So I'm going to write that pre-earnings diagonal. And this is financials. So when I get an alert for any of these tickers, this whole thing is going to cut to me, and I'm going to know what exactly I am looking at. I think these notes, you don't need to put these notes to make TradeMachine functional, but if you're getting as many alerts as I am, for all intents and purposes, you do. You're like, what is this alert? So be kind to yourself, write notes. Okay. So we've now created 56 alerts. All right. The next one on the list is fade the dip with AI. This one is going to fail. I'm not going to bury the lead. Okay. I'm going to go to XLF. So this is what platinum membership looks like. It goes this fast, just so you know. All right, so let's see how fading the dip, which is selling a put spread with AI, has worked in the financial sector over the last 3 years. And if it's worked well, cool. We'll pick the best performers. But, oops, little surprise for CML Pro members there. Remember, I will only pick the best if and only if the sector itself performs well. Okay, here we are. That's just not good enough. The win rate's fine, but I don't want to do trade for 4% with commissions. That's break even. So I'm just not going to do this trade. I'm picking in the financial sector. I am taking no fade the dips. Not going to sort it. Not going to do check, check, check. That's it. And let's do the last one, which is buy the sell off. And then we'll get into energy, which is a really interesting sector. So buy the sell off with AI. I'll load it. This is how you do it in TradeMachine. Just load it. Let TradeMachine load a ticker. It's going to load a tech sector ticker. It's fine. Go to 3 years. Let TradeMachine do its thing. Now I'm going to go to financials. This one too will not work. By not work, I mean the results sector wide aren't good enough for me to even consider going one by one. It's because of these realities as we go through some of these sectors that I had to introduce a new strategy. It's just the realities of how the market has changed over the last 3 years. And it does make sense that selling volatility has been really successful over the last 3 years because VIX has been really low and continues to stay low. But that means I want to prepare the portfolio for a different world. I got stuck. I shouldn't have closed the other one. Sorry. Go here. I'll start working on the faster machine. I'll just do it on this one. Here. I did spread. This was buy the sell off with AI, load it, let it load a ticker, go to 3 years, go to portfolios, do XLF. Okay. The top line results, that summary line, this is what platinum normally looks like. It won't look good. And since it doesn't look good, I'm not going to add any more alerts for XLF or for financials. We'll stick with 56 alerts. So let's just let it happen. Oh, ha, Jay, internal isn't. That's funny. My internal account is not platinum. Okay. So you could make an argument this is good enough. I don't think it is because this buy the sell off is actually a 1 month trade. And don't get me wrong, I'll take 13% a month for the rest of my life. I'd be a billionaire. But this is with back testing, you need to allow for some degrees of freedom, a little bit of like, it's not going to be quite as good as it looks. So this to me personally is a fail. And I'm going to say, yeah, I don't really want to get these alerts. Let's go to the next sector, and that's going to be energy. And I do think this is important to have a portfolio that is really disconnected from the rest of the market. So I'm just going to do it again. I'm going to spread the sell off, let it load a ticker. I'm going to do 3 years. And now I'm going to go to the energy sector. All right. This will look good across the sector. This is a very small portfolio, XLE. You can see the giants, ExxonMobil, Chevron, ConocoPhillips, Schlumberger, et cetera, et cetera, et cetera. Halliburton. Let's let it load. So what's interesting about the energy sector is spread the sell-off will work, but the pre-earnings diagonal won't. Fading the dip won't, but buying the sell-off will. So we do get that strategy, the buying the sell-off. It's just going to be in this sector. Okay. So sector wide, yeah, I'm going to take a 91% win rate and 43%. That's I'm in. Let's take the best, at least 3 trades. So Halliburton, PXD, Schlumberger, Devon, KMI, Marathon, and ConocoPhillips. Okay, and I'm going to do the same trick. I'm going to add the alert, but I only want to do those tickers. I'll come back here. I'll go to tickers. I'll throw them in there. This should give me 14 alerts, I think, if I did it right. 14 alerts. This is how well they've done. Awesome. I'm going to add these alerts. This is going to be spread the sell-off in energy. There you go. I'm now adding another 14 alerts. So we're now at 70 alerts so far this webinar. Okay, great. Just trust me, the pre-earnings diagonal and fade the dip don't work in this industry. In other words, they don't pass what I would consider good enough for the industry, but what does, and what we have not seen yet, is buying the sell-off. So I'll load that strategy, click 3 years, and then I want to talk about what might not be obvious, but what is happening with our portfolio and how our portfolio is getting a little out of whack already, and how we're going to fix it. Energy. Nah, we're getting crushed. Okay. Oh well. Sorry, guys. Okay, here comes the portfolio test of energy for what is buy the sell-off. So something that did work in the QQQ, so in NASDAQ 100 that I showed last time, did not work in financials, at least for me, but does work in energy, which actually does make sense, especially with some of these mega caps. So doesn't happen very often. 7 wins. Actually, that shouldn't be the case. Huh. I think there was a bug there. These results are fine, but there's more trades than this. So I'm going to do 3 years again, as painful as it might be. I'm actually going to select the energy, this portfolio again, as painful as that might be. Super weird. Okay. And here are my favorite tickers. I'm willing to select ones that have only one trade. That's fine. So of my favorite tickers in energy, 15 and 0. This is over 3 years. It just doesn't happen very often. It's fine. It's running in the background. You'll get alerted. You get a text. You get an email when it happens. I want to add these 15 alerts. So I'll add the alert. This is the first time we're going to do buy the sell-off. And AI, and this is in energy. So there's another 15 alerts. So 15 or so. So that should put us at what? What are we at? Like 85, something like that. Okay, great. Okay, the last sector I'm going to do, and this is enough for me, technology, energy, financials, and healthcare are enough for me. Having said that, consumer staples are fine, basic materials are fine, whatever you like. This is the last one that I'm going to show. We will have a third webinar, which will really finish this off, but we're also in that webinar going to show a liquidity filter. So you're only getting alerts on trades where there's reasonable liquidity. You don't have to get an alert, look at it, and be like, dude, I can't trade this. Okay. So we're going to do, what do I want to, here I want to show one where fade the dip works, because so far fade the dip has not made the cut. It does make the cut in healthcare. Fade the dip plus AI. I'm going to load it, let it load. Let it load. Legit. Go to 3 years. Got it. Then I will go to healthcare. Healthcare is actually, I think, the largest portfolio other than software. So unfortunately, this one will take some time. This is Fade the Dip. I want to show you that it works well in the sector, and then I'll show you my favorites. I'll let that load too at the same time since we're here. I only get 8 alerts out of this, but it's worth it for me. So on this screen, I'm already loading my favorite tickers in Fade the Dip in healthcare. This is loading the whole thing. So this thing must show overall strength for the sector, and then I'm just going to preload the ones that I liked. So this top line must be strong in order for this screen to matter. So here are the ones that I liked in healthcare: 25 and 2, 104% average return. Hard not to like that. So I'm just going to add those two alerts. That is selling volatility. And now I'm going to show you a weakness we have. Fade the dip in healthcare. Awesome. Okay. Here is the whole sector. Here's how the whole sector did. That was definitely good enough for me to start picking the best. Okay, in total, I have 60 alerts in healthcare, which you guys will get. I'm going to show you. Don't worry, when I go back to the slideshow, you'll just see everything. There were 27 in energy, 57 in financials, 140 in tech. And I'm going to go back to the slideshow for a second, show you a weakness, and show you about a new strategy. Okay, here we go. Okay. So this is what we just did. This is what XLF was. This was financials. Okay. We had spread the sell off, pre-diagonal. Here's how the trades looked, win rates, average returns. These two failed. And this gave us 56 alerts. In XLE, so energy, spread the sell off looked great, 14 alerts. Oops. Buy the sell off worked, the other two failed. So this gives us another 27 alerts. Here's the total averages. All right. I'm going to make this a little smaller, smushed together so I can put in healthcare. Okay. So here comes healthcare. Healthcare worked in 3 of the 4 strategies. We obviously have, as many strategies as you like in TradeMachine. I like to keep it to a small number, but it turns out that small number is too small. I'm going to show you why. Here's the problem. So by the way, here's 60 plus 27 plus 66, 56. Okay. Here's the problem. That the vast majority of trades are coming from spread the sell-off. It's a great trade. I'm okay with it. But that means, remember what I said a portfolio needed to be? It's just a lot of vol selling. So if I'm going to be meticulous, which I think we should be, about defining and implementing a portfolio, it's got to be the case that we pay attention to all of it. Yes, we looked at 4 strategies. Yes, we're looking at 4 sectors now because we did the technology in the prior webinar, right, with NASDAQ 100. That's true. But if we're really, and it's different types of action in the market: bull market, bear market, recovering market, falling market. But if we're really intellectually honest, this is really, really heavy on selling vol. And we can add a vol buying strategy. We should add a 5th strategy, which buys volatility, such that we can truly be diversified. Okay? So let's do that. This is what it's going to look like. It's going to be a new strategy, which Max inspired big time. It's going to be buying the dip, and I want to show you something. If you just do the current buy the dip in TradeMachine, it sucks. People have picked up on our strategies. It happens quite often. This is why we're implementing AI. The win rate wasn't that good, although that doesn't really matter. The average return of 5% that's just commissions. I don't consider that winning. I turned it into a call spread with Max's inspiration. The win rate went up, but the average return, not really. I then added our AI, and look what happened. The win rate went from 42% to 53%. I'm going to show this to you. The average return went from 5% to 19%. And I added 16 alerts. Let me show it to you. Let me show you what I did. It's a construct. This is how you can use TradeMachine to start constructing your own thoughts. So what I'm going to do is I'm going to go back to here. I'm just going to select buy the dip. Okay. This is what it's born of this strategy, buy the dip. Great. Sweet. Oops. That was my bad. Okay. Okay. So we're going to do buy the, we're going to load one ticker. That's fine. We'll do it for 3 years. That's fine. We're going to do it in the NASDAQ 100. You know the results aren't going to be very good. I showed it to you. I just want to prove it to you. It's fine. Platinum's ripping now. Okay. So this is buy the dip. And the question is, how do I create a strategy that's buying volatility, which doesn't really exist in TradeMachine yet, but makes use of the things we know in TradeMachine that work, right? So this is where effort comes in, right? This might be a little unfamiliar to you, but it's completely in the realm of your intellectual capacity. Completely in the realm of your intellectual capacity. So here comes the buy the dip results. Remember, it'll be like a 42% win rate, yeah, and a 5% return. Like that's not good enough. So we say to ourselves, how do I do things that have been working in the past? And I know that are similar to the other strategies, but start layering on some of the things that are different than this. So first of all, this is just buying a call. And you know how I feel about that. Remember, I had that thing that says spread always. And I said, you shouldn't really say the word always, but pretty close to always. So the first thing I want to do is say, well, I'm going to take a picture of this. I'm gonna have this here, and then I'm gonna mark it up a little bit so you know I'm not making it up, like blah. Okay, so I'm gonna bring this image back. Okay, so I'm gonna go to call spread, and I want to do a 50-30 call spread. That means I want to buy and at the money call and sell and out of the money call. Okay, that's it. I'm gonna let it run. And what will happen is the results will be the win rate will be better, the return will be a little better. This is our benchmark, right? This is the benchmark that is just not good enough to do buy the dip anymore. There's my squiggle, so you know it's real. Right there is my squiggle. Okay, so let's let this happen. So the first thing we're doing is all of the other strategies I showed you are spreads. So the first things first is like, okay, well, what's wrong? First, let's turn it into a spread. First things first. All right, it's just happening, happening, happening. Again, platinum members are going to get it this fast and you can do the whole strategy. Okay, so here it is. So we went from a 42% win rate to a 48% win rate. Average return went from 5.4 to 6.4. I don't even know if these numbers are statistically significantly different. I'll bet you these are. Okay, so the first thing is every strategy we've looked at has been a spread. Okay, good. But there's something else they did. They all used our AI. So I want to go. So this is the window. I'm going to open another window. I'm going to look at spread the sell off, which has worked so well, right? And I want to look at the AI settings there. So this is fine. I just want to load one ticker. I don't care about anything else. I'm going to go to the technical open, and it's this. This is what I want. This is our AI settings. I actually have it saved as an image right here. So you can just verify that I'm not making stuff up. Okay. So this part is the same as this part. I just took a snippet. Okay. So I want to take our spread and add this to it and see if it makes a difference. Okay. I'm going to move this out of the way. I'm going to close this. I'm going to go back here. I'm going to go to the technical open. I'm going to drag my picture back. I'm like, okay, I need to add these two things. First is 6 months asymmetry has to be below 0. Okay. Move that out of the way. I'll go to 6-month asymmetry and it'll be below 0. Okay, that's the first thing. The second thing, I'll bring the image back. In the last year, the tailoredness is below 0. Okay. Now, again, I'm not reinventing the wheel. You don't have to be an AI scientist because this is already built into another strategy, which I'm referencing that was doing so well. We should use those AI settings. Now, let's see how we do. And remember, this was our benchmark. Okay, I'll draw on it again, just a little less. Yes, that's what I want to do. Just let me draw. Okay, that's the old one. So let TradeMachine. So what have we done? We've made it a spread. We've added our AI settings, which are proprietary. This is effort. When I talk about effort, this is what effort is. You're like, The portfolio is supposed to have buying vol and selling vol and different kinds of markets. It's kind of dominated by this one trade. I need something that's buying vol, something that's different. How do I do that? Right? Well, let me take an existing strategy and make it look like the others. It wasn't a spread, make it a spread. It didn't have AI, I'm going to add AI. And what AI will I add? I don't know. I'll just mimic the AI that's in the other strategy that was working. All of a sudden, we're here. From a 42% win rate to a 51% win rate, from a 5% return to a 15% return. Now that's good enough for me to say, aha, now let me pick the best. I want at least 3 trades, and you know this process, guys. That's Dollar Tree, Adobe. This is tech, so you're going to see some names you should recognize since we're all kind of tech obsessed. You actually could choose Fastenal if you wanted to. Amazon, Amgen, PDD, ODFL, Intuit, CDNSS, Autodesk, Qualcomm if you want. I would say this is the bottom for me, 18%. Okay, so I'm going to go to add alerts. I'm going to select all. I'm going to right click, copy. I'm going to put these tickers in. These are the ones I really want. And hypothetically, if I did that right, I should have maybe 16 alerts. Did I do that right? 15 alerts. Okay. So these are the ones I want. Here's how they've looked. I'm going to go to add alert now. And here's a new one. This is buy the dip as a spread with AI in the queues. So I've just added 15 alerts. Now, what you should be thinking is, I wonder how this did in financials. I wonder how this did in energy. I wonder how this did in healthcare. Right? That's the effort. It's not that hard, but it is effort. I'm not going to do that for you. That's going to be webinar number 3, where we will have a full blown, this is now 300 trades. It'll be more like 450 when we're done, 500 when we're done. We will layer on top of it a liquidity filter so the alerts you're getting satisfy the type of liquidity you want, trades you can actually do if you want to. It'll make this list of 500 shrink again, but they'll all be alerts you can act on. And I don't think you should only use TradeMachine based on what I'm doing, these 5 strategies, all with our AI and whatever. But if you wanted to, by the next webinar with our liquidity measure, if you so desired, like I like this process. This feels like a process or a plan. This is taking patience. This is putting in the effort. If you wanted to, I think you could survive quite well as a trader with the alerts once this entire portfolio is done. I think you should do more, find yourself, find the things you're comfortable with. But I think that's it. I just want to remember, just because I've only done 4 industries doesn't mean you can't do other industries, right? I mean, oftentimes consumer staples or basic materials are phenomenal places to be because they can act differently than technology. Okay. So let me go back to the slideshow, which is for all intents and purposes 99% done. Okay, so remember I said, well, gosh, we're selling a lot of vol. We can add a vol buying strategy. By the way, you guys are going to get all the links to these alerts you're going to get. I'm going to have to write it down. I said, well, let's do buy the dip. Let's make it a spread. Make it a spread. Let's add AI. What AI? Well, the AI that was working in spread the sell-off. Right. Now I'll select the best, and I've got more alerts. And now that I've done that in the QQQ, now I can do it financials. Now I can do it in energy. Now I can do it in healthcare. And lo and behold, I'm going to have another 50 alerts or 60 or 70 alerts, which balance this. Right? Now we're creating a portfolio of trades. Okay. Now we're honoring those definitions I had at the very beginning. Right? Let's go back. Right here. It sure looked like I had this, but when I looked at the results, I was like, actually, I'm kind of doing a little bit too much of this. A little bit too much of this. So I want more of this. We did it. So we turned it into a spread. We used our AI, which of course is proprietary. Then we're going to do it in different sectors. Now we're really honoring the process. So you see, even for me, it takes effort. I thought I was done. And then when I took a sort of intellectually honest look at what I had done, I was like, you know what? That's not honoring a portfolio. I need to do more. That's the effort. It happens for me too. All right. If you're not a Trade Machine member, if you go to get Trade Machine 5, and then you put this coupon code webinar9, you can get Trade Machine for 9 days for $9. So you're not sure? In 9 days, you should be sure. Sorry, you just should be. If you put in the effort, you should be sure. There it is. I put it in chat. And then the last thing, I was talking to Ben, and I said, how should I close the webinar, Mr. Franklin? And he said, how about this? He said, why don't you do this? I said, should it be about trading? He said, it shouldn't be about trading. It's the last thing he told me. He's on my WhatsApp, Ben Franklin. He said, speak ill of no man, but speak all the good you know of everybody. Turns out Ben Franklin was a great trader. He's a pretty good guy, too.